Hello and welcome into the KE Report. Kicking off the first week of trading here in January with our friend and colleague Craig Hemke. Craig is the founder and editor of TF Metals Report, and we will put a link to that down below so you can follow along with Craig's research. And he's got a great community there. And Craig, I don't think we could kick off the year with you with a better setup in the metals. When we look across the board here at the complex, you've got gold at 44.55, you've got silver up above 76. You've got copper near $6 a pound. Everything at record highs. So just from the standpoint of blasting off here in the new year at record high metals prices, I know that's a seasonally strong time of the year, but were you expecting it to be this seasonally strong?
That's a good question. Yeah, it is a seasonally strong time of the year. And I remember the last time you and Corey and I spoke 2 weeks ago, that's what we were most excited about is, the metals had been very firm, obviously, in rallying, and silver was breaking out from its about 6, 8 week consolidation after the highs in October. And we were wondering whether gold would do the same soon and embark on another 20% rally. And we were entering into what, again, seasonally, historically, is a very strong time of the year. Really, the only frustration so far is the lack of any excitement in the shares. In fact, I almost thought back on Friday, which was the first trading day of the year, I watched a lot of the shares really get smoked in the first 2 hours of trading on the New York Stock Exchange. And I thought, I wonder if that isn't, we always talk about tax loss selling. I wonder if that is tax gain selling, in that mining investors had such a great year that they didn't want to pile any more gains into 2025. And so you wait until the first day or two or whatever of 2026 and lock in some gains then, so that you got a whole new year to find some losses to offset them. Because we had this kind of down period really at the end of the year and into last Friday. Now we're finally up again today. So that's the only frustration. I keep waiting for another surge across the board in the mining shares. Maybe it's just going to take until we start getting production reports for the fourth quarter here in a week or two. Maybe that'll kickstart things. But you're right. Everything across the board, gold, silver, and even copper making new all-time highs. And I suspect there's quite a few more to come in 2026.
Well, I think you raised two great points there. One, I have the exact same problem. I didn't want to take certain gains last year. I held them for this year, so I had a whole other year to work on finding a way to wash those out. But the main point you're making about the stocks, I was noticing the same thing the last couple of weeks, Craig, like where there was big up days in silver and gold and copper, and some of the stocks were actually down on the day or flat. Even earlier today, when I started looking at the markets this morning, silver was up 8%, and a lot of the producers were up 2%. And you would
Yeah.
think they'd be leveraging it 2 to 1 or 3 to 1, that we'd be up double digits. Same kind of thing was happening last week. To the point about the earnings, when we think about where the average price for silver was, I don't know that anybody's got an exact handle on it, but a lot of people are guesstimating, $52, $54 for Q4. I mean, we're at $76, so we're $20 higher than where we were as an average, meaning that even if they report Q4 numbers and they're amazing and everybody has a big aha moment, we're still quite a bit above that. And same thing with gold. I think the average was around 4,200 for Q4. We're at 4,500. So the reality is Q1 is going to be better than Q4, and we haven't even reported Q4 yet. Do you think we have that gamesmanship around the earnings reports like we've talked about before?
Man, it makes you wonder. Again, I think it's ultimately a function of the sector being overlooked, and a almost disbelief from those that don't, really have a handle as to why gold's going up and why silver is going up. A little disbelief in the idea that they're going to stay up. You can still go on X and read all kinds of analysis from what I call the experts, who say gold's got to, we hear it all last year. Gold's got to go back to its 200-day moving average, and then I'll be a buyer. And you heard that all last summer. Gold was going to go to 2,800 while it was at 3,400. Then when it goes to 4,400. And so I think there's still just a lack of commitment, a lack of belief, a lack of investment in the sector. I guess if anything, I feel confident about where prices are headed, not only this year, but beyond. And so I feel confident that, as frustrating as it is to watch the mining shares on a day by day or hour by hour basis, that my portfolio is probably going higher if I just give it some time.
Well, and Craig, even if we see a corrective move let's just say we had a 10% pullback in gold or silver, we'd still be at really high prices and probably still
Yeah.
higher than last quarter. But a lot of people have sent in questions, so I'd love you to field this one about the Comex and the margin requirement increases and how, as they increase those, it tamps down the pricing. This is the same playbook we did see back in 2011. We saw a couple of those at the end of last month. Some of those happened since we've talked to you. What do you think about a lot of people waiting on the sidelines because they're worried there's going to be a smash down by increasing margin requirements and then selling cascade coming after that?
Well, let's first address the derivative price as a function of the physical market, because obviously something is different. It has been in gold now for a couple of years, and silver went to 48.50, and then instead of going back to 28, it's now 78. So something is different, and the basis of it is the physical market, whether it's the central bank demand that's depleting the gold supply, available gold stocks, or whether it's the annual production deficits that's depleting the available silver supply. And there's a physical situation, let's just say that underpins these markets that's prohibiting them from going down. Because as they hammer the paper price, the futures price backward through futures selling, there's just more physical demand shows up. And so that's preventing those steep falls that people are worried about. The situation, as I mentioned earlier, that vastly different than it was in 2011, not only from a price standpoint, but just from a market structure standpoint. And in 2011, after running up to that $46, $48 level that last week of April of 2011, you had this huge smash that began on Sunday, May the 1st, carried into Monday the 2nd. And then came the margin hikes. So there was a massive smash. And then came the margin hikes, 5 and 9 days, that just put more and more pressure on anyone that was long to liquidate. Because you got in with a certain level of margin, that's a force multiplier of your cash. And as your position goes down, you got to add more cash. And then if you're required to put up a higher percentage of your margin, that's even more cash. And then you say, screw it, just get me out. And that's how you get it cascading to the downside. Well, there have been two margin rate hikes in the last couple of weeks, and it has led to selling, but it has not, led to this cascade of selling, which again, I trace back to the physical situation, whether it's the price that you see in Shanghai that is still back up to $81 or $82 today, whether it's revealed in the backwardation, the consistent, almost every day, not every day, but almost every day since October the 2nd, where the spot price has exceeded the futures price. I mean, there are all these signals that there's this physical issue that, again, underpins the price. I would want everyone to note, though, the first margin hike was back on Friday the 26th. That was a day when silver was up nearly 10% to the upside. The margin hike was announced, I think it was about 2 in the afternoon. Man, you know what? Maybe it was more like noon Central Time, 1 Eastern. It was right before the Comex close. And then price rallied a couple dollars on the afternoon Globex. Well, then here came the hammer Sunday night and into Monday, the 29th. Well, then what happens? Instead of going from 77 to 7 to 63, it went from 70 back up to 77 on Tuesday the 30th. And what happens? Hey, another margin hike. So now we're hiking every time there's upward price volatility, not downward. So that's different. Okay, so then that happens. What happens then after that? Price gets smoked backward again, back down towards 70 late last week. And now here's we record this on Monday. We're up 8% again. Well, I'm curious to see if there's another margin hike coming, Shad. Because we're right back at the price level around 77 that those previous two had come in. It'll be interesting to see what happens.
Yeah, it's interesting because that one came the day after Christmas on Boxing Day when things were really racing. And then,
Right.
like you say, the beginning of last week, the same kind of thing was happening. But then pricing was bought right back again. And they did the same thing in platinum and palladium. I think there was like a 23% increase in platinum and it really smashed it down. But even it's back up again. And it
Yeah.
also brings up the point we didn't really discuss. We did that the year ended maybe not in a superfecta because we didn't have the weekly, but we still had the highest monthly, quarterly, and annual close in gold, in silver, in copper that we've ever seen. Do you think that's factoring into institutions that say, hey, I don't care about all this short-term noise. I'm looking at the longer-term pattern here?
Oh, for sure. You can't stress that enough. Yeah, I remember I kind of wrapped this up on my site back on New Year's Eve because we always want to look at the monthly charts, the quarterly charts, even the annual chart, because that's where the underlying trend really gets revealed. And that's what drives the longer term, the really sticky hands trade, because you see these really long term trends become apparent on those charts. One of the, I just call it a chart pattern. I don't know if anybody else ever talks about this, but some that always serve me well. Say, like on a weekly chart, and you're let's just say in a bull market. You had a really nice candle 2 weeks ago or 3 weeks ago or the week before, whatever. And there's an intra-week high of, $51 or something. And then you pull back or whatever, you just the very next week. When you close above the previous week's intra-week high, you close above the intra-week high from before, extremely bullish. If it's a bear market and you close below some previous intra-week low, it's very bearish. Okay, put that to the longer charts. When we wrapped up on New Year's Eve, you could say that about the monthly charts for gold and silver. You could say that about the quarterly charts, and obviously you can say that about the annual charts as well. The long-term trend remains very bullish, regardless of the short-term noise. I mean, from when you and I first started talking, Shad, before we turned the recorder on, silver futures were 76.50. By the time we could start recording, they were 75.70. Just 1%, just vaporized out of the blue. You can really get distracted by, this kind of day-to-day stuff. Those long-term charts are what you should stay focused on, if you're going to keep yourself invested and be able to ride this to its greatest extent.
Yeah, great point on focusing on the long term versus the short term noise, but also great point on looking to see closes above a prior intraday or intra-week close on the next candle. If that can happen, it can solidify that as a support level, and then you're off to the races. You also brought up a good point about the physical versus the paper. A lot of comments out there. There's a lot of, we were also talking before we started recording, there's a lot of new content that's just plowing out there into the marketplace, AI generated content, lots of hyperbolic statements from other platforms, and it's hard to separate the signal from the noise, but there is a lot of interest from investors, a lot of questions coming into us about the physical versus the paper, which we've been talking about, it seems like forever, for decades, but it's actually starting to happen now where the Shanghai Exchange does seem to have a higher price, and it's a physical market, than the London or the Comex in Chicago, and the backwardation aspect of the spot price being higher than the futures. Do you think this is that tidal shift of physical finally setting the price?
Certainly seems to be. We can never say for certain, right? Because the Western market data is so deliberately opaque. I can remember 10 years ago, maybe it was 2013, when the daily vault stocks reports from the CME all got stuck with a disclaimer, at the bottom that says, this information is taken from sources deemed to be reliable, but the CME cannot be held at fault for anything that's inaccurate, that kind of crap. So it's like, that's a tacit admission from their end that they don't know. No one knows for sure what's in there, right? And then obviously the LBMA. I mean, people think that's like an exchange or something like that. That's not what it is. It's the London Bullion Market Association. It's a collaboration. It's a cartel. It's whatever you want to call it, of banks working in this antiquated twice daily fixing system for gold. So they don't provide anything that you can really feel comfortable about. And when they do, it's only just recently do they start providing it once a month. So how much Western physical is there really? And that's what we don't know. But I think what we do feel comfortable with, though, at least I do, is the fact that this central bank gold demand has run at record pace for 4 years in a row. And I think that has significantly drained the amount of unencumbered and, free titled gold in London that's able to be delivered. And I think the supply deficit in silver that we've seen the last 4 years, which now, I don't know, cumulatively, 800 million ounces or something like that, has really stressed the readily available supply of silver in the West, too. And now, on top of that, you've got these export controls that have been, I guess, known about since about October when they were first announced coming out of China. We'll see how that impacts the supply. And then, what was when was silver added to the list of critical minerals in the U.S. back in October or November when that was finally done? And there's just a number of things that suggest that this physical component of what is driving price is not going to be turning around soon. And that, again, that just means that, yeah, there's always going to be ups and downs. And we have these swings from one day to the next. Maybe tomorrow we back down another 6% on another margin hike in silver. But the long term trend, that physical, I don't want to say scarcity, that's not quite the right word, but the challenge of securing physical metal in your own hands and in size is definitely underpinning price. And the price is being more reflective of that physical component than it is whatever the derivatives are trading at.
Well, and again, with online information, you got to take everything with a huge grain of salt. But there's reports of metals being liquidated from the West and flowing east to close the arbitrage between where things are trading here and where things are trading there. But we also hear a lot of, I think, misreporting about how much gold or silver is actually being held at the Comex, how much bars were ordered and getting in front of terrorists versus what they have now. Even the recent news, which I guess we got to get into with Venezuela over the weekend, some people are saying that it was really a ploy for the U.S. not to take over the oil industry and to help the country, but to also get access to all their silver. So there's all these narratives swirling around. What do you make of the flows of the physical metal? Are they leaving the West and all heading east? Is everything being melted down over in China? What do you make of all those arguments?
Well, that's been going on for years. I remember writing about that 10 or 12 years ago, about from west to east. I knew a guy named James Gibson that actually wrote a book called that, From West to East, and how the gold leaves the London vaults and it goes to Switzerland and gets re-refined into 4-9 form and cast into kilo bars and shipped to China to never be seen again. I mean, that's been going on for over a decade. And no doubt persists. I laugh. I hadn't thought about it, but I remember seeing that over the weekend, and all of us, I had no idea that Venezuela had this massive silver hoard that they'd never told anybody about. I was like, oh my God. I put that one right up there with the asteroid, I think, that we're going to mine someday. I don't think that Venezuela had some silver in tonnage size sitting in a vault somewhere that it's going to be raided. But I saw it too. I saw people saying that on Twitter too.
Are we
Now
getting
we
a
do
safe
know.
haven demand from it, though? Do you think some of this action today is safe
Well,
haven from Venezuela, from the military operations?
I no, I don't think that has anything to do with anything, and I don't think the rallying in gold today. I don't think really has anything to do with it too. Either. I mean, we had a nice pop last night, even while the dollar was up, and then we rallied again today during Comex hours because the dollar fell about 40 cents, and that kind of drove the algos to buy it more. I don't think, to me, what you've seen today didn't have much to do with Venezuela. It fits into a bigger picture, remember we talked about the most important weekend of 2022 was right after the Ukraine war started and Russia was kicked out of SWIFT and they had their foreign currency reserves frozen. That remains it's just a vital event in economic, world monetary system history because this central bank gold demand really kicked off then in 2022 and continues to this day. This is another piece of that puzzle, I suppose. Again, get sideways with the US, there's going to be hell to pay. So maybe, by extension, there's a bid for gold today, because, well, that central bank demand isn't going away anytime soon. Witness what happened in Venezuela this weekend. But I don't think today's action is a safe haven thing. At least to me, it's not.
Okay. Just thought I'd ask because a lot of people are
Sure.
wondering that. And you hear, again, all this information swirling around on the internet. It's hard to suss it out. But you bring up a good point about the 2022 event where we kick Russia off the SWIFT system being a seminal moment. And looking ahead to your macrocast that you're working on for this year, which should be coming out any day now, one of the themes we talked about in our last call was the working title for it was Scott may have something to say about that. And it was really referencing when they were in the Oval Office, Trump and Scott Bessent, that they were talking about how they would pay for some of these initiatives they have in place. And you think that could tie into how they deal with the balance sheet and gold. And I believe that's the theme that you are going to be exploring in this macrocast. So talk about a seminal moment from 2022. We had possibly another one last year. Do you want to dive into that at all?
Well, and as I've always explained to you, and people might remember me saying, I write the forecast for myself. because there's a no-win deal. I even had a guy email me in December, Shad, that told me what an idiot I was because I said silver was only going to go up 30% in 2026, 2025. And I'm like, there's just no winning with these people. But I write them for myself so that I have a written record that I can go back to. And for when I get stuff wrong, I can at least have some idea, at least what I was thinking at the time when I wrote it. And you go back to January last year, and nobody was bullish, man. Trump was going to drive a strong dollar, and Doge and Musk were going to trim the budget deficit by $2 trillion, and we were going to have a balanced budget. And the dollar was going to soar, and we're like, that's not true. But that's what everybody thought. When gold was $2,700, it had just gone up 27% the year before. Gold's ready to plunge, right? And of course, we know what happened. And I think, again, you can trace it all back to Sunday, February the 2nd of last year, where Trump is in the Oval Office, signed an executive order to create a sovereign wealth fund. And a question comes up, where are you going to get this wealth? And Trump says, well, we're creating a lot of wealth. And Scott here has some ideas as to how we're going to do that. And Besant looks like, has the look on his face like, you told me there wouldn't be any math. And like, I got to talk now. So he kind of kicks the dirt and shuffles over next to Trump and says what he said about we're going to stand this up for the American people. We are going to monetize the asset side of the balance sheet and, said a few other things in kind of a word salad answer. And I think that changed everything. Again, I mean, gold was $2,700 that day. And it finished at what, $4,400, $4,300, whatever we finished, back last Wednesday. Now, there are other factors that went along with it over the course of the year, but a 65% year. I think other people are seeing what's coming and have been kind of front running what's coming this year by buying in 2025. So, yeah, this year's Macrocast will deal with that. I did go with that. It did end up being the title. And anybody that wants to read it can stop by TF Metals Report or I'll pin it on the top of my Twitter profile. So if you want to go to @TF Metals on Twitter and click my profile, it'll be the pinned link, just like the one this year has been the pinned link or the pinned tweet all year long. It'll be up there all year long if you want to read it. And just don't email me and tell me what an idiot I am, because I already know that. I know I'm an idiot. I don't need random weirdos on Twitter to tell me I am. That's already known.
Yeah, if you're wrong, they let you know, and if you're right, you weren't right enough. So
Right.
there's no way to
Exactly.
win. But you bring up an interesting point about gold being up 27% in 2024 and then up about 64% last year. Can we have a triple header here? Can we have a hat trick where we're up double digits again this year? Or has it moved so much that it's unlikely to see that 3 years in a row? What do you think about that idea?
Well, let's see what happens with the pricing scheme, first of all. I mean, I don't think it's all going to delever and unwind, but I mean, who knows what events are in store for us. If, though, things continue along, I don't think we're going to do 60% again this year. I mean, that would be truly unprecedented. I mean, if you go back, I don't know, back to the 2008, 2009, 10 period, you had a run there about 25 to 30% 3 years in a row. And then it kind of, we got to peak in 2011 and into 2012 where we got down to single digits, and then we got the crap kicked out of us in 13 through 15. So, stringing together double digit gains, several years in a row wouldn't necessarily be unprecedented. And again, I look at everything they've told, not only the balance sheet stuff. We enter the year with Fed rate cut expectations at 1 or 2, because that's what Powell told you in the middle of December. Well, who gives a shit what Powell thinks? I mean, he's getting kicked to the curb 1st of May. It's what the next guy thinks. And it's what Trump wants to do. And Trump has said he's going to put a yes man in there. He publicly stated he's not going to put in there somebody that disagrees with him. So you're going to get 5 or 6 rate. I mean, Fed funds rate by the end of this year will probably be half what it is now. And then Besant has said that they're going to meld the operations of Treasury and Fed together. And to me, that means if long rates start to sell off, duration sells off, and 10-year note goes above 4%, they're going to put in some kind of yield curve control too. And this is all extraordinarily bullish for gold. And then you throw the physical picture on there. Again, I may be Pollyanna and whistling past the graveyard and all that stuff, but I'm pretty sure we're going to have another good year, Shad.
Well, it's a good point to bring up the expectations or the Fed expectations about who the new yes man will be for Trump and, how dovish that'll be, what'll happen to interest rates. We've talked a little bit about the sovereign wealth fund. We've talked a little bit about some of the central bank buying. Just as a final question, are there any other big macro themes for 2026 that are on your radar that you think could move the needle?
In terms of gold and or silver?
Yeah, or just even economic health. Because if you remember, for the last 4 years in a row, we've had cries for a recession that's imminent,
Yeah,
or that the
yeah.
interest rates would be doing something totally different. Anything else you see in the economy that could ripple the waters?
Well, this actually writing up this year's forecast was about took half the times it usually does because I finally just said screw it. I thought there'd be a recession in 23. Nope. 24. 25 for sure with the yield curve uninverting. So I was like, I'm in the crowd now, the people that say they're going to run it hot like you've never seen. And I think that's what they're going to try to do. And the messaging from Trump and Besant a year ago versus now has completely changed. Because a year ago, again, it was all about austerity and we're going to cut the budget deficit and we're going to do this and that. And now it is, we're going to grow our way out of it. Now, people may think I'm crazy. Yeah, they're not going to do yield curve control. They're not going to try to grow their way out of it. They're not going to monetize the debt and all this kind of stuff. And people think that because it's never been done before, right? They talk. People always talk about it, but they never do it. Um, this weekend was an example of how. I'll tell you what, this time's a little bit different. Again, love Trump or hate him. This is not a political statement, but he's a different cat, man. I mean, he's not the regular politician that just writes letters of condemnation, or raging statements, in the well of the Senate. I mean, this dude says what he's going to do, and then most of the time he goes and does it. If I were in Greenland right now, I'd be like, getting ready to celebrate the 4th of July this year. I mean, that sounds like, this whole Greenland discussion has been like, yeah, right. What's he trying to prove? But, he sent Don Jr. over there a few times. They keep bringing it up. I wouldn't put it past him. So when we talk about all this stuff, the revaluing the gold reserves and getting some deficit neutral cash from the Fed, a couple $1 trillion that you can put in your investment fund. Don't be surprised. I wrote this down because I included this in my forecast. They had that press conference Saturday morning with Trump and Rubio and Hegseth and those guys after what happened in Venezuela. I wrote this down. This is exactly what Rubio said when he comes up. Now you can say, oh, he's just kissing Trump's ass and all that. Maybe he is. I don't know. But he said, this is what people need to know. And this is what he said. Trump is not a game player. When he tells you he's going to do something, when he tells you he's going to address a problem, he means it. He actions it. This is a president of action. If he says he's serious about something, he means it. And I think so far, in large part, especially geopolitically, that's true. So if Trump and Besant are saying the only way they can forestall the collapse of everything is to try to grow their way out of it, that's what they're going to try to do. And so I think the economy will probably continue to creep along. I think they're going to print cash. The next Fed chairman's going to cut rates. They're going to do QE and yield curve control if they have to. And they're going to try to force this thing forward through monetary policy and fiscal policy as far as they can. And that will be to the benefit of gold and silver.
All right. Well, I think that's a good place to wrap it up. They're going to run it hot this year. They're going to try to grow their way out of it. And even though things haven't been tried before, I agree with you. I think this is an administration that's willing to try things that are out of the box and take action, even if it's action that doesn't even make sense to other people. They're going to try it anyway. So
Yeah.
there's a lot of wild cards in store for 2026. We're starting off the year on a very strong foot in all the metals, really, whether it's gold, silver, platinum, palladium, copper, even zinc's up. Things are looking good. Oil's a big wild card now with the Venezuela situation, and so we'll watch the energy space, but it's going to be an exciting year. Definitely click on the link below to follow along with Craig over at TF Metals and watch for that macrocast, hopefully coming out later this week, or go visit him on X to the link he mentioned and go see it pinned to the top. We'll be looking for that. I'm sure we'll dive into that more in our next discussion. Craig, always fun to talk to you. Great to kick off the year with you here, and looking forward to a great 2026.
Let's do it. It's going to be pretty wild, Shad. I look forward to visiting with you every Monday.